So you hear that a company like AMD is dropping $10 billion. And you think, wow, what are they buying? A new competitor? Building some massive new chip factory? Nope, they're buying themselves. Their own stock. It's a huge move, and it begs a pretty big question. Why? Well, that's exactly what we're going to break down right here.
All right, so here's how we're going to tackle this. First, we'll look at the buyback itself. Then we'll talk about the big choices a company has when it's swimming in cash. After that, we'll get into the nitty-gritty of why they'd buy their own stock. We'll even do the math on how it boosts their numbers. And finally, we'll see how this fits into AMD's grand plan.
Okay, first things first. Let's talk about the sheer size of this thing. So get this, in the middle of 2025, AMD's board greenlit a new $6 billion buyback plan. And that was on top of what they already had, pushing their total authorization up to a mind-boggling $10 billion. And as of the fall, they still had basically all of it, $9.4 billion, just sitting there, ready to go.
And that right there is the big mystery, isn't it? I mean, AMD is locked in this epic battle for the future of AI. You'd think every single penny would be going into R&D, into building the next great chip. So why on earth are they taking billions of dollars and just buying back their own shares?
Well, to figure that out, you got to put yourself in their shoes. When a company is this successful, it faces a really interesting problem: what to do with all that cash.
And believe me, AMD has a lot of cash. Their chips and GPUs have been flying off the shelves, and by late 2025, they were sitting on a pile of over $7 billion. You know, it's one of those good problems to have for sure.
So when you have that much money, what do you do with it? You've really got three main choices. You can plow it back into the company, more research, maybe buy another company. You could give it back to your investors as a dividend check, or you can do option number 3, which is exactly what AMD did: buy back your own stock.
Now, both dividends and buybacks are about giving money back to shareholders, but they're totally different animals. A dividend is simple. Here's some cash, enjoy. A buyback is a bit more clever. The company goes out and buys its own shares off the market, which means there are fewer shares left. So if you're a shareholder who didn't sell, your slice of the company pie just got a little bit bigger.
Okay, so now that we know the options, let's dig a little deeper. Why is a buyback such an attractive move? And look, this isn't some weird, newfangled thing AMD came up with. Not at all. As reports from places like S&P have shown for years, stock buybacks are a classic move in the corporate playbook. Big companies have been doing this for a long, long time. So why do it? Well, it boils down to 4 key things. First, it's a huge signal of confidence. Management is basically saying, hey market, we think our stock is a bargain right now. Second, and this is the one we're really going to focus on, it boosts a super important number called earnings per share. Third, all that buying can help prop up the stock price. And last, it's a flexible way to use up a ton of cash without locking yourself into paying a dividend forever. Okay, that second point about boosting EPS, that's the real secret sauce here. It's so important that we're going to stop and look at the actual math. This is really the engine that makes the whole thing work.
So what is EPS? It stands for earnings per share, and it's one of the numbers Wall Street is obsessed with. The formula is dead simple. You just take the company's total profit and divide it by the number of shares that exist. That's it.
All right, now check this out. This is where it gets cool. Let's look at 2 scenarios. In scenario A, on the left, there's no buyback. The company's profit grows by 8%, so its EPS also grows by 8%. Makes sense, right? But now look at scenario B. The company's profit grows by the exact same 8%. But this time, they bought back 5% of their shares. And because you're dividing that same profit by a smaller number of shares, suddenly the EPS growth shoots up to nearly 14%. It's like magic, but it's just math.
And let's be super clear about this. The company didn't actually make any more money. The profit growth was identical in both cases. All they did was shrink the number of shares, that bottom number in the equation, and boom, they created a much bigger growth number on paper. That's what the finance pros call EPS accretion.
And this is the whole point, really. It's just like Howard Silverblatt from S&P says here. A buyback does a bunch of things at once. It makes investors happy, it can help the stock price, but the real kicker is that it directly juices up that all-important earnings per share figure.
Okay, so we've seen the how and the why. Now let's zoom out and ask the big question. So what? How does this massive buyback fit into AMD's grand strategy?
You know, this buyback didn't just happen in a vacuum. 2025 was a wild year for AMD. They were making moves left and right. They bought a company called ZT Systems to grab their AI expertise. Then they sold off the manufacturing side of it for a cool $2.4 billion. And right in the middle of all that, they approved this buyback and signed a game-changing deal with OpenAI that linked GPU sales directly to their own stock.
So when you step back and look at all those pieces on the board, you can see the strategy. On one hand, they are going all in on AI, grabbing talent, locking in huge customers like OpenAI, and on the other hand, they're playing a very smart financial game, using tools like this buyback to keep their investors happy and make their numbers look great. But look, it's not all smooth sailing. Every strategy has risks, and AMD is no different. Even they'll tell you in their own official documents that they're dealing with a volatile stock market, they have to keep churning out hit products, and, of course, the whole world economy and political scene can throw a wrench in the works at any time. That's just the reality of the game they're in. So that leaves us right here with one final huge question. AMD has shored up its finances, they're flexing their financial muscles, and they're making their shareholders happy. The real question is, how will they use all this power to fight the next round in the all-out war for AI dominance? That's what everyone is waiting to see.